Let's get chatting with the management of one of those companies that reported their earnings, Shwetank Singh, who's the MD and CEO, the new MD and CEO of Chalet Hotels. Thanks a lot, Shwetank, for joining in, and congratulations, our first on-air conversation that this is. The 3 points that we'll obviously be discussing with you: one, the budget announcements for travel and tourism, outlook for FY26 and FY27, and the target growth that you have in your real estate and annuity business. Let's start with, the budget announcements that came by as well. The finance minister did speak about developing multiple tourism centers, etc. Fell short on specific details. But the last two budgets, if you notice, the word tourism or developing tourism or the orange economy has been spoken about a fair bit. They fell also short of announcing a blanket infrastructure status for the hotel industry. But be that as it may, have you seen any, formidable improvement from the government side when it comes to operating?
Hi, good morning. Thank you for having me on the show. No, absolutely. I mean, it's very heartening to note that travel and tourism is finally getting its due. And the fact that, it has always been a great contributor to the GDP overall, as well as to the employment percentage. It is high time that it is recognized as one of the, key industries that contribute to the overall growth of the country. So from that perspective, it's all been good. And, some of the stuff that came through this time is also very heartening, because the approach of the government clearly is to improve the overall tourism infrastructure and not just, focus on one part of tourism. And that's one of the things that has been lacking in the country. The experience of tourists who have to be seen holistically and not just one segment of their holiday. So it's great that the government is looking at it that way. It is sad indeed that our request of granting it a blanket infrastructure status has not been met once more. But I'm sure that, with the prominence that tourism is gaining in the conversations of the government, we will be there soon. So I still have that hope.
Okay, still have that hope there. Good morning. And thank you so much for joining us on the show. This is Vinny in this side of the conversation as well. Just want to know, in terms of your numbers, to manage to see good growth in terms of your 9-month move as well, right? Gone up in terms of revenue to 2,211 crores for the whole year FY26. What does your target stand at in terms of revenue, and what is the expectation now that we should have for FY27?
Thank you, Vinny. Unfortunately, it's hard for me to give you forward numbers, but it has been an excellent growth for us, as you've just stated. If I look at just pure Q3 numbers at a consolidated level, we grew revenue by about 27%, with EBITDA growing by 29%. But ex-Resi, because Resi is a one-off, we normally see our business ex-Resi, and that's also grown 23% on revenue and 24% on EBITDA quarter on quarter. The other good thing is, on a 9-month consolidated basis, we have grown 24% on revenue to about 1,503 odd crores and about 677 crores at EBITDA level for a 28% year-on-year growth. So excellent growth overall. Q4 is also looking decent. January has been tough overall for us, but February is coming in strong and March is coming in steady. So whilst we don't expect as strong quarter, but we do expect a Q4 also that comes in strong, and then that will bring the overall result for this year to be very good. The macros of the economy stay strong. It's broadly in favor of the industry. The demand supply arbitrage also stays. So we expect not just the next year, next 2 to 3 years to be quite strong as well.
So 2 to 3 years, fair to assume that, there would be about 6 to 8% increase in occupancy and a near double-digit sort of ARR growth. Would that be a fair estimate?
It's interesting you say that, because if you see pan-India numbers for the calendar year, and not talking financial year, because most operators report calendar year numbers, we have come in at about 67% occupancy so far, pan-India at about 8,800 rupees ADR, and that brings the RevPar to say 5,500. And that growth has been quite steady and very encouraging, and that's been the case for the last 3 to 4 years. So there's no reason that we shouldn't expect a good RevPar growth upwards in double digits for the coming few years. How it will pan out between occupancy and ADR remains to be seen, but I suspect that the ADR will grow stronger than occupancies, because occupancies are now nearing the 70% mark, which is more the standard for markets.
Yeah, exactly why I posed that question. But, just a couple of questions before we let you go. As a customer, I thoroughly enjoyed the Athiva experience. I must say, from Mumbai, it's a 90-minute drive with the erstwhile Duke. And this is something that we would, have a conversation with Mr. Sanjay Sethi in the past as well. And now that you have decided upon this entire bouquet of Athiva properties, what is the outlook here? What do you expect in terms of business contribution coming in from this business? And also an updated number on your debt. It was a little over 2,000 crores that I last saw. Where does that number stand at, and the repayment plan? So on Athiva and debt, if you could give us some color.
First of all, thank you for going over to Athiva. It is a point of pride for us, and what we have done with what was erstwhile the Dukes and is now called the Athiva Khandala is absolutely brilliant. We've actually, even the blade of grass is not from the old hotel. We have invested over 170 crores in that property, and not just the product, even the service that has come out has received absolutely fantastic reviews. So that particular hotel is well on its way to sort of dominate the market in that particular micro market, and we are very comfortable that we'll continue to do so. Our Athiva plans, as you're aware, and we have made that announcement, is at this point is to put a name across our own properties. So we have announced 900 keys under this, including the Athiva Khandala. And actually, it's not different from the announced pipeline. It's from within the pipeline that we will be, very brand agnostically assessing which hotel would fit the Athiva brand, and therefore, even though it's our property, we will give it a full run against all the other brands that are available. So, as a company, we have not moved away from third-party operations. Athiva is one of the offerings, and yes, we will favor it. It's our brand, but we will continue to assess it in a dispassionate manner.
Okay.
And finally, just to finish off on debt, our debt remains at about 2,000 odd crores. That's not moved dramatically from the last time we spoke, and we are very comfortably sort of placed both from an internal accrual perspective and headroom to take more debt to sort of fund all our future expansions and acquisitions as they come in.
Okay, Mr. Singh, thank you so much for joining us this morning on the show and giving us an outlook, or what we should be keeping an eye out on for the company going forward. Expected to see a double-digit RevPar growth in the next few years. That's what we'll watch out for as well. Thanks so much for that. But on